today's video, we will be learning about royalty accounts. In this, I will be covering topics like meaning, types, basic terms and illustration so that you understand exactly what is royalty accounts, right? So to begin with, you need to understand first the term royalty. Okay, I will begin with an example. Say, I am a person. Okay, I am an author of a book. I write a book, right? But to publish it and to produce other copies, I give certain rights to the other person. Right? Say person A. I give the rights to person A to produce such books that I have written. So when this person is producing copies of my book, he will earn certain profits, right? So if I'm giving him the rights to produce my book, I need something in return. So that in return is the royalty, right? So let's understand what is royalty agreement. It is an agreement between two parties, that is person who gives out his special rights. I told you that I gave certain rights to person A to produce the books, right? And the person who takes out the special rights, this is person A in the example, on lease for the consideration. So over here, what is the consideration? It is always in the monetary terms, right? So over here we have two parties. Two parties are basically involved. First one is the lessor, patentee, landlord or the author who gives out certain rights. And on the other side, the secondary party is lessee, patenter, publisher who takes out some special rights from this party. Is that clear? Okay. So here we have basically three types of royalty. First one is mining, then patent, and last one is the copyright. Mining is what? We have mines, right? Supposedly there is a mine and for the extraction of say coal, rights are being given to certain industries or the companies. For that royalty is supposed to be paid. And patents are what? If something new is being produced, some new discovery is being done. Supposedly we have in the medicine sector, if new medicine is being produced, the patent can be given to the other companies for producing more of such medicines. So these are the patent rights. Last one is the copyright. Whatever the author writes, so this is for the authors, the copyright. Now the basic terms that you need to learn for the royalty accounts are minimum or the dead or fixed rent. So whenever there's a contract between say A and B, right? A is the lessor who gives out the right and who takes the right is B. Okay, he's a lessee. So what happens is in the initial year, B might not earn enough profits. So I put a clause of minimum rent. Okay. I will be explaining you all these terms with the help of the illustration. Over here, try to understand, say, I have fixed, A and B have fixed the royalty amount, say 50,000, right? But there is a clause of minimum rent. Minimum rent, say 30,000 is supposed to be paid. So if B earns sufficient profits or not, he is supposed to pay the 30,000, that is the minimum rent, to A. Alright. Next comes the short workings. So what is short working? It is the excess of minimum rent over the actual royalty. Right. Say my actual royalty was 50,000. Right. And my minimum rent is 60,000. So my minimum rent is more than that of my royalty, right? So minimum rent is more than royalty. Over here, this is the short workings, right? Next point is the ground or the surface rent. This is whatever in excess is being paid. In excess to the minimum rent, whatever is being paid is known as the ground or the surface rent. Then is the right of recouping the short workings. You've understood the short workings, right? That is the excess of minimum rent over the actual royalty. So in the upcoming years, if in the initial years say a person does not earn enough profits, the lessee does not earn enough profits, so he will have the short workings. There can be a clause set by the lessor. He can say that you can recoup. That means you can cover up your short workings in the forthcoming years. Okay, so the right of recouping short workings is getting back excess payment. I will explain you all these terms with the help of the illustration. You will understand it easily. Alright. Before moving to the illustration, there's a differentiation between rent and the royalty. So let's see about the nature. Over here in the rent, we have only tangible assets, whereas in the royalty, we have both tangible and intangible assets. In terms of rent, it can be weekly, monthly or the yearly, but royalty is always on the basis of production yield or the sales. It will vary on the basis of the production yield or the sales. Next comes is the fixed or the variable. Rent is generally fixed, right? Whereas royalty varies with the level of production or the sales. Then about the minimum rent, we've seen that in royalty we keep a clause of minimum rent. However, there is no such concept of minimum rent in the rent. Parties involved in rent is tenant and the landlord, whereas parties involved in the royalty will be lesser, patent, author, and lessee, patentee, and the publisher. Now here is an example of ABC Limited. It has leased on 1st of January 2016 at a minimum rent of 15,000, right? Merging into a royalty of ₹1 per ton with stipulation to recoup short workings over the first 3 years. Okay, please note down 3-4 points over here. First is minimum rent is 15,000. Royalty is of ₹1 per ton, and you can recoup the short workings over the next first 3 years only, right? Then the output over here is for the 4 years is 8,000, 13,000, 21,000 and 18,000. Now supposedly if I have to calculate the royalty, right? In the year 2016 it would be 8,000 into ₹1 per ton. That means 8,000 only. Similarly, we can compute it for the next year, that is 2017. Okay, over here my production is 13,000 and royalty is ₹1 per ton. So that will be, royalty will be 13,000. Similarly, for the third year it will be 21,000 into ₹1, that is 21,000. In the fourth year it will be 18,000 into ₹1 per ton, it will be 18,000. Straightforward. Okay. Over here what have I done is I've made a working table, right, for the 4 years, that is 2016, 17, 18 and 19. We've seen that our output were 80, for the 2016 it was 8,000, in the year 2017 it was 13,000, and in the year 2018 21,000, in the year 2019 it was 18,000, right? We've already computed royalty, that was ₹1 per ton. Okay, you can compute it very easily. Now, what was your short workings? Your short workings was minimum rent was more than the royalty. Okay, whenever your minimum rent is more than your royalty, it is the shortcomings, right? So over here I can see, over here you can see my minimum rent is 15,000, right? So coming over here, so 15,000 is more than 8,000. Yes. So my short working in the initial year is 7,000. That means 15,000 minus 8,000. In the next year, what is my royalty? 15,000. So what do I do? 15,000 minus 13,000. This comes out to be 2,000, right? In the third year, my royalty is 21,000. So there's no short working because minimum rent is what? 15,000. So my royalty is more than the minimum amount. So there will be no short working, right? In the fourth year, again 18,000 is more than 15,000, the minimum rent. So there will be no short workings. However, there will be surplus in the third and the fourth year, right? So surplus will be 21,000 minus 15,000, that is minimum rent. My surplus is 6,000, right? And in the fourth year, my royalty is 18,000, right? The minimum rent was 15,000, so excess is 3,000. This is the surplus. Over here in the question, we can see that there's a clause to recoup the short workings for the first 3 years only. Okay, so let's see. In the first 3 years, the surplus will be over here. We have no surplus. Over here, we have no surplus. However, in the third year, we have the surplus of 6,000, right? So we can recoup 6,000. We can recover only 6,000. The lessee can recover only 6,000. So over here, the total short workings was, over here, we can see that the total short workings was 7,000 in the first year plus 2,000 in the next year. Total short workings comes out to be 9,000, right? So now you can see that we can recoup only 6,000. However, the short working is 9,000. So what do I do? 9,000, that is my short workings minus whatever amount I can recoup, that is 6,000, is the shortcoming that was not recoupable. Okay, I could not recoup 3,000. So this is my actual loss. Actual loss of the lessee is 3,000. I hope you've understood till here. Okay, now we have to see. Okay, now we have to see what amount is to be paid to the landlord. Okay, in the first year, it is straightforward 15,000. Why? Because it is the minimum rent. Whatever is the royalty. Royalty was 8,000. So minimum rent is 15,000. In the next year, our royalty was 13,000, but we are supposed to pay the minimum rent, that is 15,000. Okay, in the third year, although my royalty was 21,000, but I have recouped whatever excess was there, है ना? Right? Whatever my excess was there, that is 6,000. I have recouped it with the previous year losses. That is why for this year also I'm going to pay only 15,000. Okay. In the last year, my royalty is 18,000 and there was no surplus, or there was, in the last year, we do not have any recoupment. That is why the entire amount is supposed to be paid to the landlord. That is 18,000. I hope these concepts are clear to you. Okay, now we are going to move to the journal entries in the books of ABC Limited. Okay, in the first year, what do I do? Royalty account is debit. Why? Because royalty account is your nominal account. Okay, so what does your nominal account says? Debit all expenses. Simple. Okay, so what do? I have debited the royalty account with 8,000. Okay, this was my royalty and we were supposed to pay to the landlord 15,000. That is the minimum account. So what was my short workings? The difference between the two. 7,000 is the short workings. Next entry, whenever we make the payment to the landlord account debit to bank account, 15,000 was paid entirely to that. Okay, then the production account, 8,000 was my expense, that are to be treated as the production account, that is the expenses to the royalty account. Is that clear? Okay, similarly, we are going to make the journal entries in the next year also. Royalty account debit, whatever was the royalty, that is 13,000, and we credited landlord with the minimum rent, that is 15,000, and with the difference between the two, that is 2,000, was the short working accounts. Right? The payments, when the payment is being made to the landlord, okay, landlord account debit to the bank account, that is 15,000. Okay, last is the whatever is the royalty that was being paid, it is being transferred to the production account. Okay, now here is the difference in the third year. In the third year, what was there? In the third year, there was a surplus of 6,000 and ABC Limited was allowed to recoup the excess amount, right? So the journal entry will differ. See over here, royalties account, that is 21,000 was your royalty. Okay, So we debited landlord accounts while making him payment, and the short working account has been credited with 6,000, because we were allowed, ABC Limited was allowed to recoup whatever was the excess in the first 3 years. Okay, and the payment made to the landlords was 15,000. Amount of royalty was being transferred to the production account. Okay, over here another thing that we need to see is the excess, whatever was a loss to the ABC Limited, that is 3,000, has been transferred to the profit and loss account. You can understand this with the help of the table. See over here, short workings not recoupable, that means short workings that cannot be recovered was 3,000. This is the actual loss of ABC Limited. So whatever is the loss, that is being transferred to the P&L account. You've understood till here? Right. In the last year, what do I do? Royalties account, that is 18,000. In the last year, royalties were 18,000 that was received. Okay. And then it is being transferred to the landlord through bank. And last is whatever is a loyalty that was being transferred to the production account. Right. So that is it for today, guys. I hope you've liked the video. And if you have liked the video, press to the bell icon and subscribe to my channel. Thank you and have a nice day.